Stop what you're doing. Seriously. Whatever you're watching, whatever you're reading, whatever rabbit hole the internet has pulled you into today, close it. Because what I'm about to walk you through in the next 15 minutes is the kind of conversation that most people only get to have in hindsight. They look back years later and say, that was the moment. That was when everything shifted, and I either saw it or I didn't. I want you to be in the first group. I've spent the better part of the last 2 decades doing one thing, studying how the world works. Not the headlines, not the hot takes, not the ticker symbols flashing red on a screen at 9:32 in the morning. I mean the actual machinery underneath all of it. The forces, the cycles, the patterns that have been repeating themselves in different costumes with different actors for literally hundreds of years. And right now, in this moment, sitting here recording this for you, I can tell you with a calm and very clear conviction, we are living through one of those rare inflection points. One of those moments that textbooks will eventually describe in past tense. The kind that feels unbearable when you're inside it, and completely obvious when you're looking back at it from safety. So, let's talk about what's actually happening. And more importantly, let's talk about what it means for you. I know what your feed looks like right now. I know what your group chats look like. I know the conversations happening around kitchen tables and on morning commutes and in comment sections everywhere. The market is doing something uncomfortable. Things that felt certain a year ago now feel uncertain. And people are asking the same question they always ask when this happens. Is this the beginning of the end, or is this just noise? And I want to be very honest with you about something before I say another word. That question, that specific fear, is not irrational. It is not stupid. It is not a sign of weakness. It is, in fact, a deeply human response to a very real and very uncomfortable experience. When the value of something you've worked hard for starts moving in the wrong direction, your nervous system activates. That's not a character flaw, that's biology. But here's what I've learned, and where I've seen the single biggest difference between investors who build lasting wealth and investors who spin in circles year after year. The difference is not intelligence. It's not access to better information. It's not even being right more often than you're wrong. The difference is what you do with the discomfort. Do you let it drive you, or do you use it? I've been in this long enough to tell you, with a very specific kind of certainty that only comes from having been wrong in expensive and painful ways, that discomfort, when it shows up in markets, is almost never a sign that something is broken. It is almost always a sign that the machine is doing exactly what the machine does. Cycling, correcting, compressing, preparing. Let me show you what I mean. When I started studying markets seriously, not as a hobby, not casually, but as a genuine obsession, one of the first things that struck me was how similar every crisis looks to every other crisis once you zoom out far enough. I'm talking about real zoom, not just a few months, not even a few years. I mean genuinely stepping back and looking at the sweep of things. Here's what I've come to understand about economic and market cycles. They are not random. They are not chaotic. They are not unpredictable in the way people fear they are. They are, in fact, beautifully, almost mechanically patterned. They move in waves, long ones and short ones, big ones and small ones, and the short-term waves, the ones that feel like catastrophe when you're surfing them, are almost always contained inside much larger waves that are moving in the opposite direction. Think about what that means practically. When you are standing on the beach and a wave crashes over you, it is very easy to believe in that moment that the ocean is trying to destroy you, that this is the end, that you should never have come to the beach. But from the perspective of someone watching from a cliff above, what they see is a person, a wave, and a vast and continuous body of water that has been doing this exact same thing for millions of years, and will continue doing it long after every wave you've ever experienced has dissolved back into the whole. I am not dismissing what you're feeling. I am asking you to borrow, temporarily, the perspective from the cliff, because from up there this current moment looks very different. Here is a principle I've built a significant portion of my thinking around, and it's one I want to give you today because I think it's the most useful thing I can offer in a moment like this. In the short term, markets are driven by emotion. In the long term, they are driven by reality. Read that again. Because if you really absorb it, and I mean truly absorb it, not just intellectually agree with it, but let it actually change how you interpret what you're seeing, then the noise of any given week, any given month, any given quarter starts to look very different. Markets in the short term are essentially a measuring instrument for collective human psychology. And collective human psychology, at the level of millions of people making millions of decisions, responding to millions of different inputs, is extraordinarily sensitive to narrative, to stories, to fear, to hope, to whatever the loudest voices in the room happen to be saying on any given Tuesday. And when fear is the dominant emotion, when the narrative is scary, when the headlines are loud, when uncertainty is high, markets tend to price things not at what they're worth, but at what scared people think they might be worth if the worst-case scenario turns out to be true. That gap between what scared people think something is worth and what it actually is, that gap is where wealth is built. I've watched this happen over and over, not in theory, in practice, in real time. I've watched sentiment collapse on companies, on sectors, on entire asset classes, and then I've watched the underlying reality eventually reassert itself. Not because markets are fair, not because things always work out, but because ultimately, in a functioning system, reality wins. The fundamentals, the actual productive capacity of an asset, the real cash flows, the genuine value being created, they cannot be suppressed by sentiment indefinitely. Sentiment is a weather pattern. Reality is the climate. And right now, the weather is bad. But I want to talk about the climate. Here's what I want you to understand about the moment we're in. And I'm going to be deliberately broad here because I think the broadness is actually the point. We are not in an unprecedented situation. I know it feels that way. I know the specific combination of factors at play right now feels novel and disorienting. But I've been studying economic history long enough to tell you, every generation believes it's the first to face something that has never been faced before. And every generation eventually discovers that the architecture of the challenge, the underlying structure of it, is remarkably similar to things that have come before. Geopolitical tension creating market uncertainty, it's happened before, many, many times. New technology creating both extraordinary opportunity and genuine confusion about who the winners will be. Every major technological transition in modern history has gone through a phase where nobody could see clearly, where the fear was real and the noise was deafening and the right move was counterintuitive. Debt dynamics, inflation cycles, currency realignment, trade restructuring. The specific words change. The machine underneath stays recognizable. And here's what history consistently shows about these moments, the moments of maximum confusion, maximum discomfort, maximum noise. They are, almost without exception, the moments that look most like opportunity in retrospect. Not every time, not automatically, not for everyone who shows up. But for people who have built a framework for thinking clearly, who have principles to anchor them when the narrative gets loud, these moments are not the problem. These moments are the point. The investors who accumulated the most wealth across the last century were not the ones who had the best information during the good times. They were the ones who maintained clarity during the bad times, who kept their head when everyone around them was losing theirs, who understood, at a level deep enough to actually act on, that temporary discomfort and permanent damage are two completely different things. Right now, almost everything being described as catastrophic falls into the first category. Let me explain why I believe that. I want to be very specific about the way I approach a period like this one, because I think the process matters as much as the conclusion. When I look at any market dislocation, any period of fear-driven selling, any moment where the narrative has overwhelmed the underlying reality, the first question I ask myself is this: are the productive systems of the world actually breaking? Or are they under temporary pressure? That's the question. Because if the underlying productive systems are actually breaking, if what we're seeing is not a storm but a structural collapse, then caution is the correct response. But if the productive systems are fundamentally intact, if the capacity to create value is still there, even if it's temporarily obscured by noise, then what looks like danger up close looks like something very different from a distance. And what I see right now, when I cut through the narrative and look at what's actually happening in terms of real economic activity, real innovation, real capacity, I do not see structural collapse. I see compression. I see reallocation. I see the painful but necessary process of a complex system recalibrating. That process is uncomfortable. It produces real losses for real people in the short term. I don't want to minimize that. But discomfort and destruction are not the same thing. Here's the framework I use to separate those two. When I'm trying to figure out whether a moment represents a real structural break or a cyclical compression, I look for three things specifically. The first is what productive capacity is actually doing. Not what prices are doing, not what sentiment is doing, what actual output, what real goods, services, and value is doing. Prices move fast. Productive capacity moves slow. And right now, productive capacity is under pressure, but it is not collapsing. The engineers are still engineering. The builders are still building. The systems are still running. The second is what the patient capital is doing. This is one of the most reliable signals I know. Patient capital, capital with a long-time horizon, managed by people with real skin in the game and real processes for analyzing value. It moves slowly, and it almost never lies. It has no incentive to say one thing and do another. It just quietly and without announcement does what its analysis tells it to do. And right now, the patient capital is not running for the exits, in ways that most people are not paying attention to because they're fixated on the short-term narrative. It is moving toward the places where everyone else is moving away. That tells me something very specific. The third is the historical pattern match. How similar is this moment to other periods of comparable dislocation? And what happened not immediately after, but over the relevant investment horizon, to the people who acted from principle versus the people who acted from fear? The pattern is remarkably consistent. The people who held their framework in moments like this, who understood the difference between the weather and the climate, have historically done far better than the people who optimized for short-term comfort. Here's where I want to get personal with you for a moment, because everything I've said so far, the principles, the historical patterns, the analytical framework, none of it matters if you can't actually use it. And the reason most people can't use it, even when they understand it intellectually, is that they haven't built the internal infrastructure to act from conviction when conviction is uncomfortable. Building real conviction, the kind that holds when the market is down and the headlines are scary and everyone around you is telling you you're wrong. It doesn't happen from watching videos. It happens from doing the work, from building your own framework, from stress testing your own beliefs against the best arguments against them, from developing what I'd call genuine intellectual ownership of your position. If you don't own it intellectually, you can't hold it emotionally. And if you can't hold it emotionally during the bad moments, then the good moments, the moments where patience is eventually rewarded, you won't be there for them. You'll have already sold. This is the thing I've watched break more wealth-building journeys than anything else. Not bad information, not bad luck. The inability to maintain conviction through discomfort. The inability to separate the temporary pain of being early from the permanent pain of being wrong. Being early feels exactly like being wrong. From the inside, they are indistinguishable. The only thing that separates them is the quality of your reasoning and the strength of your framework. So let me say this as directly as I know how. The work you do right now, not the buying or selling decisions, but the thinking decisions, the framework building decisions, that work will determine more about your long-term financial trajectory than almost anything else you could do in this moment. Because the next dislocating moment is coming. After this one, there will be another, and another, and the people who thrive over decades are the ones who built something sturdy enough to weather each one without losing their compass. That is the invitation I'm making to you today, not to follow my framework, to build your own, one that is genuinely yours, that you understand from the inside, that you can stand behind when it's being tested. Before I get to my final thoughts, a few quick things. First, I've put together something I think is genuinely useful for this specific moment. A framework document, not an investment recommendation, not financial advice, but a structured way of thinking through dislocating periods like the one we're in right now. how to ask the right questions, how to separate signal from noise, how to build conviction on your own terms. It is completely free. The link is in the description. Download it, work through it. It doesn't tell you what to think. It gives you a better structure for thinking. Second, if you want to go deeper, if you're serious about building the kind of investor mindset that holds up over decades and not just quarters, I've built a community around exactly that. People who are committed to doing the real intellectual work. Serious, long-term oriented thinkers who want to be in the room together. Details are in the description. And third, if you haven't subscribed yet and you've watched this far and found it useful, subscribe, because the next moment of maximum noise is coming. And I want to be here when it does. Let me leave you with this. The title of this video is History is About to be Made. I mean that with complete sincerity, not as a headline, not as a hook, as a genuine statement of what I believe is happening right now. History, the kind that gets written in textbooks, the kind that serious investors reference decades later, the kind that people point to when they're explaining why they are where they are. That kind of history is not made in the good times. It's not made when everything is rising and the narrative is optimistic and being invested feels obvious and comfortable. It's made in moments like this, in the friction, in the uncertainty, when the signal is hard to hear because the noise is so loud. I've watched enough of these moments to know the people who were positioned for the recoveries were almost always the people who held their framework through the declines. Not because they were smarter, because they had built something sturdy enough to trust when trusting was hard. That is the work. That is the invitation. You don't have to agree with me. You shouldn't just agree with me. You should do your own thinking, build your own framework, arrive at your own conviction. That's always been the point. But if I've given you anything useful today, a perspective, a question, a frame that helps you see this moment a little more clearly, then I've done what I came here to do. I'll see you in the next one.